Supermicrocomputer (SMCI) is experiencing a sharp resurgence in momentum, driven by renewed confidence in the AI infrastructure buildout and reinforced by a series of powerful industry signals. Investors are increasingly positioning SMCI as a leveraged beneficiary of sustained AI demand, following reports of robust order flow, a recent military related contract, and growing expectations that the company could ultimately scale toward an ambitious $100 billion annual revenue opportunity as AI compute spending accelerates globally. A major catalyst amplifying this optimism came from Taiwan's semiconductor manufacturing company, TSMC, which reported blockbuster Q4 2025 results on January 15, 2026. TSMC exceeded both revenue and profit expectations, citing surging AI chip demand as the primary driver. Full year revenue climbed 36% year over year, and management raised its 2026 sales growth outlook to nearly 30%. Perhaps most importantly for the broader AI ecosystem, TSMC announced a 37% increase in capital expenditures to $56 billion, signaling that hyperscalers and chip designers are committing aggressively to long term AI infrastructure expansion. For SMCI investors, this was viewed as critical validation. As a downstream integrator heavily reliant on advanced chips and components manufactured by TSMC, Supermicro sits directly in the AI supply chain's demand transmission path. Strength at TSMC is widely interpreted as a leading indicator for future server demand, reinforcing the bullish thesis that SMCI's growth runway remains intact and potentially underappreciated. Against this backdrop, SMCI shares surged 10.74% intraday, accompanied by a notable spike in trading volume, reflecting heightened participation from both momentum traders and longer term investors reacting to the interconnected AI narrative. The move occurred despite lingering concerns raised by recent analyst downgrades focused on margin pressure, underscoring that demand visibility is currently outweighing profitability fears in market psychology. Community discussions around the move have been especially animated. Many investors have openly dismissed a recent sell rating from a major financial institution, characterizing it as poorly timed and disconnected from accelerating fundamentals. Instead, SMCI is increasingly being framed by bulls as a highly undervalued pure play on AI infrastructure, offering more direct exposure than chip designers or hyperscalers themselves. With strong alignment to industry leaders, expanding demand from AI data centers, government and enterprise customers, and upcoming financial disclosures on the horizon, investors are anticipating that SMCI could see further reevaluation as earnings visibility improves. In sum, SMCI's latest rally reflects more than just a short term bounce. It highlights how deeply intertwined the company has become with the global AI buildout, and why improving signals across the semiconductor supply chain are reigniting confidence in its long term growth trajectory.
It was quite a big day for the stock. Let's see what it traded. 79 million shares, whereas the 50-day average is usually around 27 million shares. This is, we're talking about yesterday, the 16th of January. It's gained 10%, but it has lost everything, as a matter of fact. No, okay, no. It gained 10% in that session. Ignore this. Yeah, you can see what's going on. 10.94%, that was what it gained yesterday. Okay, so let's see. Just quickly glance at what is going on its options grid before we go on to see what's going on with the stock. Okay, we're not seeing anything. Okay, so far, not a lot of stuff. Not no decent open interests there. So it may well, there's a chance that $30. So a lot. There was a battle there on the $30, and the stock is way past that. The delta is less than so. I think yeah, market makers didn't have a. They were not that troubled. They were not that troubled. People were market participants concentrated mostly on the stocks, on the stock itself, on the stock. Yeah, 32.9. So it didn't. They didn't trade the stock that much. Or am I? Let's see now. I didn't look at the put side of things. They didn't trade it that much. They didn't trade the stock that much. It wasn't heavily traded. Yeah, based on what we can see here, nothing really much apart from that 63,000. Yeah, open interest, but I think much of what he traded yesterday was done by non-market makers. Okay, the underlying trend is now neutral to bearish. Okay, and the extrapolation is saying that higher prices may remain in place up till Tuesday, the 27th of January. Momentum is expected to remain flat pretty much all through the whole of what is left of this month and towards the end of February. As a matter of fact, the extrapolations say that the stock is going to continue to consolidate. The stock has been consolidating since the 16th of December. So the stock is consolidating within a longer term neutral to bearish trend. Projections are currently saying 25.18, 22.56, 20.94. They're all downward projections. Previous projections go as high as 62.13, 57.59, 50.25, 49.43. And it has a pivotal projection of 49.58. It's If it closes above that, then the probability of it advancing towards 52.09 may improve. Okay, so we have been able to gather the data from this daily chart, and we got it digested on Claude. So what we can see here, positions opened all the way back to 421 days ago are currently in profit. Going by that, the fact that these values are positive, you can see this measures the angle of attack of the 21-day moving average. It has a positive value of 0.511, but that moving average is not trending. The 10-day moving average is trending. Trend mode is from 0.25. So anything positive indicates that positions opened all the way back to that respective period is in profit. So positions opened all the way back to 21 days ago are in profit, but the ones opened 40 days ago, not in profit. The ones opened 200 days ago, not in profit. So we have a market grid as well. Market grid gives us a range of possible prices. So we have them here. The R's represent the resistances. So this will be the top of the range. As the stock approach advanced through these resistance values, people begin to take profits. Yeah, they begin to take profits, but at the same time, it may also continue to advance as well. And then when it's in the support zones, people also begin to plan to re-enter into the stock, but lower prices also tend to print as well when it's at these sort of levels. So you can always pause and read the probabilities of it retesting the various market grid prices. Okay, we have a trade setup here. There's no guarantee that if you apply this trade setup that you're going to make money. Yeah, there's no guarantee at all. So this is just strictly educational, if not entertainment. So short term feed the spike. Okay, so bearish version 70% probability. Okay, aggressive short 32.8 to 33.2. Monday gap up or early strength. Okay, conservative. Okay, so that's just if you're interested in that. Okay, price target will be 31.56, 31.66, 30.14. I think maybe that's why people were target. We saw 60 something thousand contracts on the $30 strike. Yeah, so probably people are expecting it to pull back towards those levels. Yeah, rationale for that setup. 10.94% move on Gap News creates unsustainable premium All the price pressure momentum, second derivatives are negative. Momentum exhaustion imminent. 31.66 triple confluence zone acts as a mathematical gravity well. Okay. 3-day extrapolation forecast 30.11 suggests mean reversion on the way. Okay. And then long term trade setup, reversal accumulation. So if it reverses, accumulation zone will be 28.3 to 31.66, scaling 30.5 to 31.66, 40% of position. After short term reversion, add 26 at 28.69, 29.7. Okay. And then final 30%, 22.56. Okay. Yeah. So your target will be $35 to $36. Retest of broken support from 2024. Okay. 55% probability. 41.88. Oh, wow, that's really ambitious. Okay, 35% probability. Is it trading? It's trading at a discount too. Yeah, you can see that. Yeah, this is the moving average. Is trading below that at a discount to the 200-day moving average. Yeah, okay, $50 plus if AI infrastructure narrative accelerates. Okay, stop loss $26. Yeah, national TSMC results confirm AI infrastructure super cycle intact. 36% revenue growth, 30% 2026 guidance. 200-day moving average bottoming. Okay, this is going neutral with declining negative derivatives. Current 22% the discount to the 200-day moving average, historically extreme for high beta AI plays. Military contracts plus 100 billion $100 billion revenue targets equal to fundamental rating catalyst Q. Okay, risk factors. Yeah, you can always pause and read. Yeah, continued sector momentum. Yeah, yeah. Okay, well, just have a look and see what you make of SMCI, and thank you very much for watching this video.